Welcome to Influence and Insight, the podcast where we meet with the top leaders in financial services and marketing to find out about the core ideas that have shaped their career. So I'm here with Anthony Thomson, who's the co-founder of the Financial Services Forum, but has also founded City Financial Group, which was sold to Publicis, Metro Bank in the UK, Atom Bank in the UK, and 84600 in Australia. So Anthony, welcome to the podcast.
Well, thank you for having me.
You exited the forum in 2019, and you've had a few things going on since then. Can you sort of bring us up to date with your career since then?
Oh gosh, since 2019, well, I probably need to go back a little bit because the forum was started, as you of course well know, Alex, and I ran it for the first 7 years, and then in 2007 had the rather bizarre idea to start a bank. That bank was Metro Bank. Had the idea in the Seashell fish and chip shop in Lisson Grove. Opened our first location just around the corner from here in Holborn. I chaired that from 2010 to 2013. It's probably worth mentioning the insight that underpinned that, because in a sense it goes back to the very start of the forum, which was the reason we came together to form the forum back in 2000, was a belief that in financial services in particular, its marketing was behind that of its consumer contemporaries. And we believe that good marketing should be good for the consumer. And that was the conceit of the idea that underpinned the forum, as you will well know. So panning forward to 2007, I saw in banking in the UK that most of the banks in the UK just thought they existed to make money. They'd lost sight of the customer. And the opportunity that underpinned Metro Bank was to give customers better value. And hopefully we did that. It was very successful, went from 2 people to 3,500 people, $5.5 billion market cap. But by 2012, 2013, looking at the market data, which I still did, it became clear to me that the future of banking was going to be digital in general and mobile in particular. Board didn't share that view, so I stepped down as chairman, raised $100 million to launch Atom Bank, which was the first mobile bank here in the UK, again based upon that precept of great customer service, great value. I've chaired that until 2018, when got a call from the chairman of BBVA, our biggest shareholder, who was interested in increasing their stake in Atom, which I thought was great for the bank, but for me felt a little bit like working for BBVA. So I stepped down, and I only have 2 jokes, and maybe you'll get them both today. You're certainly going to get one of them. In 2019, I was sitting in Somerset, which is where we live. My wife and I live in the UK. And I was saying to my wife, Louise, what do we want to do with the next 10 years of our lives? We can do anything we like. And she said, how do you feel about moving to Australia? And my joke is I thought she just meant me, but fortunately she meant both of us. So in 2019, we moved to Australia, to Sydney. I was invited to chair a startup bank there. There was 7 people, some great technology. We built that out, got it licensed, got to go very fast in market. In 2022, got an approach from Ross McEwen, who many of your viewers will know from his time running that Western UK, was then running National Australia Bank, the biggest bank in Australia, to buy the technology, which I didn't want to sell him. That very quickly morphed into an offer to buy the bank. And in May 22, sold the bank to National Australia Bank for $440 million and was out of work again.
And so you've also founded Archie, which is a startup accelerator, and you have an even newer venture this year. Can you talk us through those as well?
Sure, and they're kind of related to that precise moment in time in May 2022. 2 things happened. One is the bank was bought by National Australia Bank, and 2, I was offered residency in Australia, which is quite unusual at my age. And it only requires 2 things: police checks, which is somewhat ironic given it's Australia and it's full of our criminals, and a medical. And the medical showed that I had a tumour about the size of a softball in the middle of my chest. So fortunately, it was all removed. I'm 100% recovered, but it took a little while. And I didn't really feel like doing much in that period of time. So I took a couple of non-exec roles. I was on the board of a global lending business in Australia. I was on the board of a bank in Abu Dhabi in the Middle East, and board of a company here in the UK. And as I sort of got my strength back and felt a little bit more like doing something, I'd been looking at the venture capital industry and I was really interested in it. And you will know the VC industry very well. The vast majority of VCs actually lose money. Very few actually return money to their investors. And I wonder, why is this? So I started to look into why early stage businesses succeed or fail. And there's a kind of inflection point at which one of two things happens. They get some product market fit, they've got some revenue, and they get to a point where they need to scale. And it seems to be at this point, most fail and a few succeed. And the reason seems to be, the data tell me that the reason is that most of them don't know how to scale rapidly. So I brought together a team of people in Australia, in the UK, in the Middle East, who are very skilled very expert in scaling businesses. And we created a business called Archie, named after Archimedes. We thought if he was born today, he'd call himself Archie. Around the principle of leverage. So how can we help leverage these businesses? In essence, Archie helps early stage businesses accelerate their rate of pace of growth. And we do that by offering services and experience and expertise and playbooks. But instead of putting in money, we put in those services in exchange for equity. So that's Archie. It's been going for 2 years now, doing very well. 6 portfolio companies. Classic VC mix. One failed, a couple are doing okay, and a couple are doing incredibly well. So we're very happy with that. And then in September of last year, I started to research an idea I had to create a new bank specifically to serve the needs of family offices and ultra high net worth individuals, which is going to be based in Jersey. And hopefully, if we should have our license before the end of the year, and then I'll be the same one-trick pony doing the same trick over again.
So there are a lot of kind of lessons I'm sure we could draw across your career, but the premise of this podcast is obviously we've asked you in advance to prepare some thoughts on your influences, ideas that have shaped your career, and we actually have one here just to which Anthony carries with him at all times. So Meditations by Marcus Aurelius. So can you sort of talk about why you chose this as one of your sort of seminal books?
Yeah, I had a hard time. I had to go down and look in where we keep all our books at home. We couldn't quite call it a library, but where we keep all our books, and think, what are the things that have influenced me? But I actually keep this copy, this rather dog-eared copy of Meditations in my backpack, and just dip into it every now and again. And I was, in fact, introduced to it by my son, Felix, who, again, some of the forum members will remember, who's quite into philosophy. And having looked at a number of different philosophical routes, I think the one I felt most comfortable with was stoicism. And Marcus Aurelius was one of the first Stoics, and Meditations is really his reflections on his life as a Stoic. And it resonates with me. It's hard to say sometimes, but when you look at a picture, why does it resonate with you? But it did.
Mm-hmm. And obviously he talks a lot about, it's sort of about self-control in a rapidly changing universe, I suppose. Has that, you've obviously launched businesses in different contexts, and that's changed quite rapidly from Metro Bank to Atom Bank. How has that sort of philosophy of change maybe, does that resonate with you at all?
I think it's less about a philosophy of change. I think one of the big takeaways from me from Marcus Aurelius was the impermanence of us, and how little time in the overall scheme of time we spend on this earth, and therefore why what we do should add some value. And I'm a great believer, and every business that I've launched has been based on a very simple precept, which I absolutely believe in, which is profit is a byproduct of doing something well for the consumer. If you give them a better product or a better service or a better experience, and you manage your business well, you will be profitable, or should be profitable. But it should be that way around. The profit should be a byproduct, not the reason for doing it. And whatever I do, hopefully whatever I have done, and certainly whatever I'm going to do in the future, has to provide some value to its constituents, be it the customers, be it the people who work within the business, be it with its shareholders, be it in the community in which we operate. Maybe it's just a thing about getting old, but that creating value for those constituents is more important to me now.
Mm-hmm. And Marcus Aurelius, obviously, he was an emperor, but he wrote this book, and that's more than most leaders are not philosophical to that degree, I suppose. How do you see that sort of balance between leadership, action, and thought, I suppose?
Yeah, probably contrary to your thoughts, Alex, I didn't read it with the view to becoming an emperor. I did actually read it on the basis that I was more interested in the stoicism. Although if I could be emperor, no, I don't think I would want to be. When you look at what happens, I think most emperors came to a pretty bad end. He was definitely regarded as one of the better emperors of the Roman Empire. I think because he was a man of great values. He saw himself, even as emperor, as a servant of the people. So his role was to guide and help direct, but he saw himself as a servant of the people. I think it's an interesting parable for today when we look at some of the world leaders who see the role of everyone else to be subservient to them.
Mm-hmm. And sort of going from onto what your next book. So you mentioned the Intelligent Investor by Benjamin Graham. Warren Buffett obviously is a huge fan of that book. I suppose, can you tell us first, why did you choose that book?
Yeah, because I was not surprising given all my time at the forum. I was very interested in the concept of money and concept of marketing money. As you know, Lucian and I co-authored a book on that subject. But I was very interested in investing, and there are hundreds, if not thousands, of people who would claim to be experts in the process of investing. Everybody knows Warren Buffett as one of the world's great investors. What a lot of people don't know is that he was guided by Benjamin Graham, and in fact wrote the preface to Benjamin Graham's book. It's 800 pages. It's hard reading, especially for somebody from the north like me. But if you just distill it all down, what it says is that if you are a stock analyst and you understand how to value individual companies, you can do the DCFs, the asset tests, all the various measurements to ascertain the financial value of the company. You can make money out of individual stocks. If you're not a stock analyst, then you should just buy the index, put it away, and not look at it for 10 years. There is lots and lots of compelling evidence since then, which shows that, and probably some of your viewers won't want to hear this, but that all investment managers over time revert to the norm. Nobody outperforms the index over a sustained period of time. And it was just great to read a book that was written in such a way that it just explained away a lot of the misbeliefs I think that we have about investing. As Warren Buffett once said, I think he was interviewed by Jeff Bezos, And Jeff Bezos said to him, how come everybody's not as rich as you, Warren? You tell everybody exactly how you invest. You tell them what you're going to invest in, how you do it. Why is everybody else not as rich? And Warren Buffett said famously, because no one wants to get rich slowly. And so I just thought it was very interesting.
And I suppose there's a parallel there with stoicism, because I think Benjamin Graham does talk about, not chasing fads, not the Isaac Newton South Sea bubble example, I think is mentioned, that Newton sort of sold at quite a good peak of the market. He would have made a tidy profit, but then he jumped back into the hysteria.
Yeah.
And that's, one of the cleverest people who's ever lived.
Yeah.
So I suppose that sort of rationality maybe underpinning things a bit, keeping a cool head, is that something you sort of think is the key to being a leader, or an essential part of it, maybe? Or an investor?
Yeah, I've chaired 3 banks now, a number of businesses, and with a modicum of success. And I'm often asked, what do you do as chairman? And I say, my single most important role is to keep the management focused on what's important. Because I've seen so many times in particularly quick, rapidly growing businesses, they're sort of beleaguered by opportunities. You see all these bright, shiny balls of opportunity. They go, we could do this, we could do that. Go, let's just stick with what's important. Let's stick with what we set out to do first, and then what we set out to do second. Now, clearly, you need to be agile. There's no point in banging your head against a brick wall if what you're doing isn't working. But by and large, I think most businesses fail because they get distracted from their core competency. They think because we're good at this, we can now do lots of other things. And there are as many management theories as there are members of management. But for me, something that served me well is helping people to keep focused on what's important.
Mm-hmm. And obviously at Archie, you mentioned you have a few VC businesses you're working with. I think on the Archie website it says only a quarter of VC-backed startups make it. And I think this point from Benjamin Graham around the intrinsic value of a business and is obviously a crucial one here. And so when you invest, how do you assess the value of an idea of a business? How do you know which ones are, or plan which ones you think will be winners?
Yeah. If we knew who the winners were going to be, I'd be sitting on my desert island. I wouldn't be sitting here talking to you.
Maybe you would be emperor.
Maybe I would be emperor. Yeah. So I think, having been both an investor in businesses and the recipient of investment capital, so I've looked at it through both lenses. And I think the first question I ask myself is, what's the problem that this business is solving? What's the customer problem that this business is solving? I've seen so many businesses that have really brilliant, elegant solutions for problems nobody care about. So first thing is it solving a real problem for real people? Second thing is, will people pay for it? Because you can come up with a brilliant app to babysit my dogs for me, but will I pay for that? So there's is the idea solving a real problem, and secondly, will people pay for it? So, and then the third thing is, why now? Why do this today? Why would I invest in this business today? So that's the lens through which we tend to look at our prospective portfolio companies. But you can't, sort of now arguing against myself, which I can do very easily now that I've read Marcus Aurelius. One of the other, arguably as important, if not more important things, is the quality of the management team. On a number of occasions, I've just backed the management. I thought, you've got a choice. Good management, mediocre management, great idea, or great management, mediocre idea. Give me great management and mediocre idea every day of the week, because it's all down to the execution. And I've occasionally backed management teams where I haven't thought the idea was great, but I thought the team was so good, they'll get to a point where they'll pivot and it will become something really important. So I hold, as Bertrand Russell said, the ability to hold two opposing views at the same time. So are we solving a real problem? Is the management team really good? Either could be first.
And I mean, bring it back to Marcus Aurelius. Obviously he was considered a great emperor. His son was obviously considered, well, infamously in the film Gladiator, not a great emperor.
Yeah.
I suppose, firstly, what do you look for in a management team? What makes someone a good leader that you're happy to invest in? And I suppose also there's a point there around, that the founder of a business might be different to the person who is the right person to scale it. So how do you sort of manage those questions?
That's a great point. I have said before, and I'm sure I'll say again, that the people who get you here aren't necessarily the people who are going to get you there. In most of the businesses I've been involved with, often the team that are great at building a business, they're great at working with very limited resources, making decisions on limited data sets, being very agile. The people who thrive in that environment tend to be entrepreneurs, people who like starting businesses. In financial services in particular, the people you need, the risk people, the finance people, some of the ops people, don't like working in that very amorphous framework. They like more structure around them. So it's very hard often to get those people in at the beginning, but equally some of the people who are great at the very beginning, as the business grows and it matures and it starts to get some structures around it, needs some organizational structure and not quite rigidity, but frameworks, enterprise risk frameworks, particularly in banking. Some of the entrepreneurs, some of the people who are great at founding businesses struggle in those environments. And it's unfortunate. I've had experiences where we've had to part company with people because their skills didn't transfer. And all you can do is attempt to do that in the most decent and honourable and ethical way that you can.
And you've been quite self-deprecating, I'd say, in this interview so far. I mean, where would you put yourself in that continuum of founder management, or do you think you're someone who can do both?
I think I am so incredibly naive that pretty much every business I've created, when I've got 6 months or 12 months into it, I thought, oh my God, if I knew then what I know now, I probably wouldn't have done this. But I am a glass half full kind of guy as opposed to glass half empty person. But any modicum of success I've had, whilst I'd love to claim it was all down to me, it's been, if I have a skill, it's been in surrounding myself with really smart people. No man is an island. You need those people around you to make a success of things. And then when they are successful, clearly I will take all of the credit. But the harsh reality is I couldn't have done any of it without the great teams of people I've had around me.
And around obviously part of Archie is the mentoring aspect of it. Are you able to talk about your experience working with mentors, how maybe people who have shaped your career?
Yeah, I think there are two people in particular who have helped me. One was my stepfather. I had my mum remarried, a lovely man, and I was terrible at school. I was just the worst student imaginable. Didn't pay any attention. And when it came to what were then called O-levels or GCSEs, I'm not sure what they're called today, I performed woefully. And of course, maths is something you pretty much need. And my stepfather, Dennis, God bless him, sat down with me and said, well, I wonder why you failed your maths. And I think it was 16 when I took the exam. He sort of looked at my maths capability and worked out I probably had the maths ability of a 10-year-old. And he just took me through it very slowly and explained the logical nature of it. And I was thinking, wow, actually this all makes sense. And whilst I'll never become a mathematician, I've got a pretty good sense of numbers now. I can read a balance sheet, a profit and loss account, cash flow statements. And that was down to him, and he helped me in so many other ways. And the other is a guy called Ken Bell, who was the father of my girlfriend was 26, and a girl called Janet Bell. And I really liked Janet. I thought she was lovely. And she unceremoniously dumped me for one of my best friends, who she later married, so I kind of forgave them both for that at a later point. But her dad became like a mentor to me, and he helped me with so many things. And I knew him for 35 years up to his death, and we used to meet regularly. And every conversation, even up to when he was 85, started with, "What do you think we'll do when we grow up?" And it was just such a great attitude towards life, which hopefully I've inherited a little bit from him.
Mm. And is that sort of what when you're mentoring people, that's a motivator for you to sort of have that impact, maybe?
I don't know. Yeah, why do people? Am I selfless about it? Probably not. Why do I do it? I enjoy it with some people. Why do I do anything? At my age, it's because I just like working with interesting people on interesting things. And even young people, my son Felix, I mentioned earlier, he and my other son James and my daughter Sarah, although they're a lot younger than me, I learn from them all the time. In Archie, in the new bank that we're creating, in the previous businesses that I've had, I learn so much from everyone. Nobody's got a monopoly on good ideas. And so I just, on the occasion, if it is mentoring, I don't know, talking to people, seeing if I can assist in some way, I probably get as much out of it, or maybe more than they do. So I'd love to say it was altruistic and that I was led by Marcus, but I'm probably being a bit more selfish.
And from that, obviously, Archie was set up to help with that scaling of businesses. When you started Atom, there was clearly a sort of supportive culture, I suppose, from government, wanting competition in the sector, wanting to support digital. How do you sort of see the startup and scale up ecosystem in the UK at the moment?
Yeah, I'm not sure I would agree with your point that the government was supportive and helpful. There's that old American joke, I'm from the government and I'm here to help you. Ultimately, good ideas will succeed and thrive regardless of the environment. Does the government help? I think occasional initiatives help. But by and large, is it much different today to the way it was 20, 30, 40 years ago? Arguably, there's more regulation. There's more constraints on what we can do and say. Maybe I'm not a fan of governments per se in terms of their ability to support our businesses. And of course, in the UK, from memory, this statistic might be a bit out of date, but something like 90% of all businesses are small businesses, less than 10 or a dozen people, and they contribute massively to the economy. Does business help them? Does government help them as much as they could? Probably not.
And is there anything you'd want to see, even if it's not specifically startups, but just entrepreneurship, business in general, the economy in general? We've got the budget coming up quite soon. Is there anything specific you'd want to see from the UK government?
I think it's less what I want to see from the government, more what I want to see from the general population, which is that in America, it's quite normal and it's quite acceptable for businesses to fail. So you try something, it doesn't work, you get up, you dust yourself down, you start again, and Americans go, "Attaboy, good luck next time." in the UK, if you fail at something, it's a kind of social stigma you'll wear for the rest of your life. So I think, there's that great saying, nobody ever built a monument to critics. I think people should just be a little less critical and a little bit more supportive of people who get off their backsides and actually try to do something.
Mm-hmm. So, Anthony, you obviously set up the Family Office Bank. Can you sort of talk a bit about why you set that up and what the gap in the market maybe that you saw was?
Sure. I mean, it's amazing. All roads lead back to the forum. So this comes back to a conversation in September of last year with one Vahe Vartanian, who again, many of your members will recall from the forum. He left many, many years ago and set up a community for family offices around the world. And I was talking to him about it in September of last year. And I thought, is there an opportunity to create a bank specifically to serve the needs of family offices? Because of course there are many banks that serve them. And I started to research it in February of this year. And I was asking, marketed by background, asking family offices, single family offices, multi-family offices, family office advisories, what do you like about your bank? And what don't you like about your bank? And what they like about their bank could be written on the back of a very small postage stamp. And what they didn't like about their bank were three things. Firstly, in every single conversation, they said, all my bank wants to do is sell me investment products. Secondly, they're not very good at serving the needs of my family office and the family members. And thirdly, there's a conflict between family offices take a long-term, often intergenerational view, and banks take a very short-term, often quarterly view of profits. So the conceit of the idea is to create a bank that uses technology to deliver better products and services and experiences to family offices faster, and uniquely, the bank is owned by the family offices that it serves. So getting rid of that dilemma, because the bank, the client and the shareholder are now completely aligned. So that's the theory. We will see now if I can put it into practice.
So we're going to move on to the quickfire round,
Yep.
where we ask you your music, film and literature choices. So starting with your Desert Island Disc. So I think you're allowed 5 on the show, but one here. What's your one album or track?
Funny enough, I collect vinyl, and I did in the 70s, and then I gave it all away for these wonderful things called CDs, and then have spent the last 20 years buying it all back. But in that 50-year period, I've always had one favourite album, and that is Can't Buy a Thrill by Steely Dan. And I still listen to it today, 50 years on.
Great. Okay. And next one is film.
This is a really tough one. I really struggled with this, and I'll probably regret my decision afterwards. Well, I probably regret
most. The island.
I probably regret most of what I've said afterwards, but I think it would probably be the Blues Brothers. And the reason I would say the Blues Brothers is because I love music, as I've just alluded to, and it was a rare opportunity that so many of those great early blues musicians all came together and played brilliantly in this crazy, crazy movie, which is of course a failure when it came out, but has become something of a cult classic since then.
It's quite a surreal film as well, when the bit when the army and everyone get involved to track down the... It's quite a strange film. But yeah.
I don't know what you were smoking at the time, but it was, I think it is a bit like that.
Yeah. And finally, literary character.
Oh, again, I really struggled with this. Then I started thinking about what authors do I like, what authors have I read. And I came to the main protagonist in For Whom the Bell Tolls. And what I loved about him was the fact that he was an American soldier who was fighting on behalf of the Spanish socialists against the fascists. He put his beliefs above his own life. He put his values of humanity above himself. And despite reading Marcus, I could only aspire to qualities like that. And I think it's someone whose qualities I really admired. And of course, I love Hemingway's writing.
Great. Well, I think that's our quit for a round. So we'll leave it there. Anthony Thomson, thank you for being here today.
Thank you for having me.